Inflation hits a 31.5-year high. Today, we're going to have a look at inflation, where it's impacting the most, and all the details. So stick with this till the end so you can find out exactly what's going on. Let's start off from the top, having a look at inflation as it hits a new high. Annual inflation has risen 6.1%, largely driven by new dwelling purchases, fuel, and furniture, with new figures that have recently just been released by the Australian Bureau of Statistics. It shows and really signals that there's going to be further tightening ahead as borrowers are really grappling with a double whammy with interest rate increases and cost of living really impacting on the ability to meet their monthly commitments. Whilst businesses are also struggling, they've got staff shortages and supply chain issues and disruptions happening here. We saw that in today's release with the Consumer Price Index. It actually shows that annual inflation has risen 6.1% since June 2021. Now, what that actually means for a lot of guys out there is that's a 31.5-year high. So unlike most countries that get inflationary data monthly, Australia, we only see it every 3 months. So whilst, we get figures on jobless rates monthly, inflation is something that is only tracked every 3 months, which means when this sort of data comes out, there's either relief or despair. I think as this information comes to light, it's certainly going to be a lot of despair out there. And those that are out there are already feeling the pinch with increased costs of living. You only need to go to the supermarket or fill up at the Bowser and you can see what's going on. For comparison's sake, in New Zealand, they clocked up inflation at 7.3% for the same period, also a 32-year high. The UK and the US, they're posted their inflation at 9% as of June, and the Eurozone at 8.6%. So we can see there's a real issue there across the world. Now, this actually is the highest increase in inflation since the introduction of GST. Now, what that actually means is there's been increases on new dwelling costs, and we've seen that with construction, a number of builders going bankrupt or going into liquidation because the costs and the margins just aren't there. And we can see that there's been a huge increase in the costs for new dwellings, 5.6%, automotive fuel up 4.2%. And that's been a real issue as well. The cost of fuel is having a knock-on effect for everything else. So if we think about fuel for everyday transportation of goods and freight and all that sort of stuff, that has a net result that if fuel's up, everything else goes up with it. Now, shortages in building supplies, high and of course, labor supply, high freight costs, and ongoing elevated levels of cost of construction is continuing to contribute to price rises for newly built dwellings. And we also saw second and third order consequences of the Home Build Grant and similar state-based construction programs that have actually contributed to the rises in costs on the building side of things. Now, with automated fuel, it's reached a record level as a fourth consecutive quarter of price rises. We saw strong increases in May as well as June. So this is certainly something that is hurting a lot of people out there. And when we look at supermarkets, we saw only with the recent flooding in New South Wales and even in Queensland at the start of the year, lettuce got up to $10 just for some lettuce, which is ridiculous. And we've seen vegetables, they're up 7.3%. Even meals and takeaway food rose 1.4%. It's all been contributed to the supply chain disruptions, mainly from flooding, labor shortages, and the rise of freighting. So that's been a huge contributor. If we have a look at the ABS, the Australian Bureau of Statistics, they've got the data that they've just released today on CPI, so Consumer Price Index, and the cost increases. We can see what it was in March, 5.1%. That's increased. Now, during the March quarter, we did see the Reserve Bank increase the cash rate. So we have seen a number of cash rate increases. back to back from May, June, and July increases on rate. What they're actually saying is there's likely to be another 0.5% increase this Tuesday, which is the 1st of August, another 0.5% in September, to really try and curb this inflation, which isn't really having any impact so far with the rate rises. Now, if we look at the areas that have been most impacted by the change, it's interesting to see. So housing, we talked about a little bit earlier, furnishings, certainly up there as well, and transportation, which is a lot to do with fuel. We can see in other areas such as food and alcohol and non-alcoholic beverages up 5.9%. So really, we're seeing a huge impact across the field there. It's certainly going to put a pinch on household budgets as we're getting a double whammy between inflationary costs, so the cost of living going up, as well as the fact that interest rates are pushing mortgage repayments up. We're seeing even tightening in the rental space, where increases in rent are certainly starting to be affected for all those out there. So certainly across the board, we're seeing a lot of cost increases there. I think have a look at your budget, see if there's things that you can cut out. The crazy thing with inflation is it's based on increases. So if fuel is at $2 per liter at the moment and it doesn't increase, well, then they say inflation's leveled out, but cost of living is still elevated. So it'll be interesting to see how this is tackled. Guys, we're mortgage brokers. We're based in Brisbane. We deal with people Australia-wide. So if you're needing assistance with refinancing, trying to reduce some costs, get the rates down, even looking at an investment or purchasing a home, call us at 1300 088 065 or visit our website, huntergalloway.com.au. We'll see you next time, and thanks for watching.